All right, welcome back to the second edition of the Market Watch Weekly Show on the Financial Summit channel. How are you doing, Mike?
I am doing very well, very well. Happy to be back.
Yeah, we've had a hell of a weekend. Very interesting things going on out here in this part of the world, and they have had their effects on the market, which we're going to be going through in this. We're also, of course, going to be covering traditional finance as we do every week. This is a weekly show on Monday with Mike, yourself, and me, Sami Loyal. Our links are always in the description below for you to check out if you want to subscribe to our own channels. And we've had an interesting weekly open. So why don't we just get into it, bro?
Sure, let's do it.
Let's start off with your chart.
All right. Yeah, I'm thinking what should I be talking about? I guess we can just pick up from last week. If you've been watching the show last week, what I've done there is covering the macro analysis on basically the cycles and what my expectations are overall. That quick recap, shall we? That this entire leg is ultimately part of a much bigger bull market that already has started not in January 2023, but actually in 2020. Right, actually in 2020. That's kind of where we left off. And since then, Sami, I think you've covered the more local or midterm time frame price action, where you've addressed the possibility of breaking to the upside. Whereas we had a conversation, I remember prior to that stream, where we were talking about this exact thing, and personally, where I mentioned that I would like this consolidation phase to just last a little bit longer, because ultimately, in my opinion, that is the more healthy way to go. We have been building quite a lot of volume within this range over the last 2 weeks. So eventually, when that elasticity basically contracts within a range, as you often see within a triangle, then it suddenly explodes. However, the problem with triangles is it is a very easy to recognize pattern. Therefore, a lot of people are looking at this kind of patterns, and that is one of the reasons why you would experience quite a lot of fake outs to the upside and to the downside. So the way that I look at these kind of formations is essentially I want to be aware of what everybody is looking at, but I want to construct something around that. And the way that I do that is simply putting in a sideways channel, coming to the conclusion that in the end, we are just pretty much going sideways still. We have seen quite heavy volatility. We've seen a 20% drop to the downside, basically in a day. But if you really put the technicals out there, and this is literally one of the more simpler forms of technical analysis that I generally perform, it basically paints the picture here. What we've done is, after we have taken out this high, literally 1 week ago, this was on the last show. That's where we were here. What I wanted to see there is a fake out to the downside, maybe some consolidation here, right? And then perhaps we could have made a move on. We have failed to see that strength, and we have saw an exact repetition of this, what I call a failed auction of this piece of price action. Now, what that means is essentially you attempt to break out. Initially, you form a bull flag, which is a bullish formation, after which the expectation is to see that continuation to the upside, and the trend, the local trend that we have here, continues. The longer that takes, the more likely it is that this is actually part of a larger narrative that fits in with an overall correction. So that is what we have seen already, breaking back down below, which at the time I've been trading short. Then we have seen another attempt to the highs, and we have saw an exact repetition of this piece of price action exactly in the same way, but on smaller scale. However, the result ultimately was bigger, all playing back into the narrative of retracing back to the midline of the channel, which did give a nice trading opportunity. However, as we were doing so, we failed to actually change that trend back to the upside. As a matter of fact, so let me talk about what does a trend change, a local trend change look like. This is how the trend looks like: low, lower high, lower low. And then what you want to see is that local trend change, seeing something along the lines of this. You want to see a high, you want to see a higher low, and then you want to see a candle close above this high, which ultimately never happened. If you zoom in very much more locally. This is never this is never happened. So while personally I have been trading this long because I was eyeing this level and this as a good support level, the thing is you need to think of probabilities and it doesn't always play out. We failed to actually change that trend and gain that momentum to the upside. While the potential was there were a lot of people shorting right in support. That generally creates liquidity to the upside, so the possibility of having a nice good old squeeze to the upside is a real thing. Then, unfortunately, the catalyst of the downwards price movement ultimately broke on Saturday night. But this was the very first sign of the chart not showing up the strength at all yet. Then the news broke out and that amplified that weakness to the chart, which ultimately gave us a near full rotation to the downside of this channel.
And it
However,
was actually a very good back test of our support levels as well. We
yeah,
haven't been down at that support level from, I mean, from the time that we hit that support level up until today, up until before, it was 24 days, which is a really nice big gap of hitting that support level. But yeah, carry on.
yeah, no, I fully agree. And obviously, we also had like some gaps on the futures market, which personally ranked the lowest in priorities, but it was an additional piece of confluence that gave away the possibility that we could see that fail and therefore that drop to the downside. In regards to the news, obviously, this was a reaction from the news that broke out over the weekend, right? Can't deny that. But ultimately, if you simply stick, if you cut out the noise, the problem with news is that that is the reason why price might move. But as if you're looking to profit in the market, you don't need a reason for why price is moving. All that you need to
Absolutely.
know is that it does, and you need to identify levels on the chart that can give you some grip on, okay, where does the chart look strong and where do we see signs of weakness. And based off that, you make actual investment or trading decisions or financial decisions. And that is, as a trader, how I personally approach the chart. The news is irrelevant for me when I
Beautiful.
make
Yeah.
trading decisions because that always comes after the fact. Um,
Completely agree, bro. Let me jump in here and give you a little bit of my
yeah, go for
thoughts
it.
as well. I'm just going to throw my chart on here. I was saying the exact same thing. I mean, war looks like a black swan event, but ultimately, the main point is that we had not lost this low down at the $61,000 price area. And until and unless that low gets penetrated, and even if that low does get penetrated, we've still got an additional few percentage points for a deviation, which I'm still not going to be worried about. So really, down to this wick is completely okay with me. We are still range bound, and the only thing that's happening is everybody is crying that the market is about to crash into oblivion. And of course, it looks like that because of things like the Bitcoin dominance, right? We've seen Bitcoin's dominance absolutely shoot up with the crash. In fact, the crash was much, much more significant for altcoins than it was for Bitcoin. We can see this reflected very clearly with from high to low, a 29% correction, and literally just within the space of about 4 or 5 days, most of that correction taking place here, minus 26%. Bitcoin did not have anything similar to that. In fact, Bitcoin's similar kind of drop, only down by about 14%. So this was very clearly a losing battle for altcoins, not so much a problem for Bitcoin, because Bitcoin didn't even break market structure. Again, we go back to that total chart, which is so important. That's this total 3 chart, excluding the market cap of Bitcoin and Ethereum, completely losing its market structure. This is a much more scary chart than Bitcoin's chart. And there is still some support down over here, and we can talk about this a little bit later on. But what's very clear is that Bitcoin was able to hold on while the altcoins weren't. The only thing that means is that we are seeing a good, healthy flush in the market. Now, from this point here, and I was actually live while this move was happening on my own YouTube channel, always trying to be there with the volatility. The number one thing, like I said, was making sure that we don't penetrate this level. We didn't penetrate this level, but what we did do, and this is something that I like to do quite a lot, Mike, in this on these charts, is actually I'm going to go ahead and choose a nice empty chart here. I'm always interested in looking at how the market bounces off key levels because I want to kind of read between the lines and start to understand, is there strength in the market when we bounce off a support level, or are we bouncing off weekly? Which sounds a little bit weird, but I'll explain what I mean here. We've got a setup on this chart here where the first time Bitcoin saw a major support bounce after climbing up into the 60K range in 2024 was right here on the 5th of March. And what we can see is that from this absolute low, that Bitcoin set up to the high, it took about 15 hours for the price to move up by 14%. Okay, so within about half a day, the price is up by 14%. Now, on the next occasion, if we look at a similar time frame, in this case 19 hours, we're only up by 12%. This is very important. The first bounce we get happens quickly and it happens intensely. The second bounce we get happens slower and it happens with less intensity. Now, if we look at the subsequent third attempt at this support level, if we look 1.5 day later, so that's 36 hours, we're going even slower and we're rising up by even less. If we look at a similar time frame here, up by 20 hours after the drop, we're only up by 8%. To me, this is actually building a very clear image where we've got a lot of weakness in the chart starting to show itself, where the more we're actually hitting these particular areas on the chart, the less intensity we're responding with in terms of our bounces. We're bouncing up slower and we're bouncing up with less intensity. And that can be a strong warning sign of what's to come. So I'm going to be watching out to see if the market does end up returning back down to these levels. And if it does, I'm going to be looking at even lower price targets. And this also feeds into the next key point that I have on this chart, which is our beautiful Fibonacci retracements here. I want to take a look at this from our low to our high up here. We have got a beautiful 382 Fibonacci level. And those of you that are familiar with Fibonacci's are going to know that the 382 level is a reflection of the 618. So our 618 level sits at exactly the same place. These are, of course, the most important Fibonacci levels on the chart by most people's according to what most people would say. And this is clearly a very polarized line on the chart. We're producing big reversals here that take the price down by big percentage points, and they are consistently respected in the market. So we've used it as support, we've used it as resistance continuously all throughout the market. And I think that if the market with this kind of drop is able to produce a larger rally up to that $68,300 level, that can be a very telling point of resistance for the chart. If we're able to get above it, then we're probably revisiting these highs, maybe trading sideways, as you've said, Mike. We've actually, on my channel, we've got a concept called halving sandwiches that I've been joking around with, which is very simply that usually, in fact, every single time without an exception, before and after the halving, the immediate weeks before and after the halving, always have no interesting price action. There's always nothing interesting. Everybody is expecting some sort of crazy thing to happen on the day of the halving. It's obviously complete cope. It's just the kind of thing that you'll pay attention to if you don't have experience in the market. We're not expecting crazy fireworks to go off on the day of the halving, right? That's all just a bunch. It's just a mess. And so if we are going to continue to follow that kind of sideways trading range that you were talking about, Mike, then I think tagging those highs could make sense if we end up breaching this resistance level. But if we don't, I am going to be expecting that we revisit this low, and I'm going to keep expecting that our subsequent bounces off these levels are going to get weaker and weaker. What do you think about that, bro?
Yeah, that's a good question. What do I think about that? Yeah, no, I do agree with you that. So I would say there's two things to consider. It is definitely true when price is bouncing into a support level, right? The first reaction is usually the most volatile, and then the secondary reaction is a little bit less intense, and it takes slower and it slows down time. It does mean that price is eating away at support. But the simple fact remains, support is support until it's not, period, end of discussion.
You don't get bearish at support.
Exactly. And the second thing is, this is also a sign of price action becoming more diluted. It is like slowing, price action essentially contracting in a way. And that is very characteristic of a range that is progressing until its elasticity is going away. So basically you start out with a very wide range, then it contracts, and then ultimately you have that breakout that's going to be very volatile and very explosive. And the longer that takes, and the more volume is actually being transacted within that range, the more likely good follow through of the breakout of that range is going to happen. And
we've seen this beautifully with our 7-month consolidation down here in mid 2023. Obviously, this was a very painful range, but you're getting paid for that. From the very bottom up to just the first high we set, we double, and up to the next high, our all-time high, we've pulled off a 3x gain.
Exactly. Yeah, exactly. And that's literally how that's just how it works. And as far as the price action goes, to me, let me actually share back on my chart. How do I do that? Like that. All right. Learned something new here today. That's great. For me, it's just really simple. It's really not that hard. When it comes to reading the chart for me, $68,000 is essentially resistance. We are currently simply in a local downtrend within the range. Low, lower high, lower low, lower high, lower low, lower high. And as you can see, the midline of the channel is being respected perfectly fine. This is also a level that I gave out to my trading group in the morning. If we cannot reclaim $68,000, the probability is in favor for lower prices. We have yet to reclaim that level. And therefore, I'm really simple. I'm expecting lower prices until we reclaim $68,000. If we do reclaim $68,000, my strategy is going to be very simple. I'm going to look to buy the retracements. If that doesn't happen, I'm going to be looking for those lows of the range, and they can come in. We have confluence there at $60,000, $59,000, $58,000. I have no problems with us dropping actually below. However, if we do see, let's say, a daily or even a weekly candle close outside of these levels and we stay there for some time, then I'm going to have to reconsider in the way that I look at this consolidation phase. Right?
We're gonna have resistance. This 60K range will become resistance again, and that would be a problem.
Yeah, exactly. And I'm okay with price spending a few days or so below it before reclaiming it, right? I have no problem with that. And it doesn't mean that I'm becoming very bearish per se right away, but I will have to rethink how this piece of price action then would fit into the bigger narrative. Like, are we indeed now going into a longer lasting sideways consolidation, perhaps even, a zigzag? If you're familiar with Elliott wave theory, having this A, B, C type of correction before we get that continuation to the upside. However, for me, this is a little bit speculative at the moment. I know where my levels are at, which is at the lows of the channel. I know where the chart is going to show signs of strength. And that really is it. That really is it. Very simple.
Absolutely. Good take, man. Good take.
That's how I look at Bitcoin.
Dude, tell me what you think about traditional finance and how that relates to things.
You're talking about S&P 500 stuff.
S&P,
like
the dollar, maybe even
Sure.
gold. Gold had its breakout. Now it's trading at about 23.50.
Yeah, let me actually cycle through that. So, if you have been trading the markets, then you might already be aware of that. If you're a new trader looking for that information, then we have the S&P. I'm looking here at the ES futures contracts, which essentially is the same, just it's futures. There's no difference in the chart or price action whatsoever. But the ES is generally correlated with Bitcoin. If that goes up, Bitcoin tends to go up as well. These correlations come and go. At the moment, they are not that strong. It's still there, but they're not so strong as, let's say, they used to be in 2020. I remember in 2021 when the ES moved up 3%, Bitcoin would move up 15% in a single day, for example. Now it's a little bit more diluted.
But I think it's worth just touching on why that is. I think a lot of people actually struggle with this, but the reason that we see this kind of correlation is because and everyone's kind of singing the songs of the ETFs and stuff like that. When we're in a stage now where the market is so mature that you need much larger money to enter crypto for crypto to pump, you need to have a healthy traditional finance environment for that to happen. It's the exact same thing we see where when Bitcoin is making people a lot of money, they start diversifying into altcoins because they want to be taking even more risk on. They're feeling greedy, they're feeling like a genius, and so on. That stuff is all fantastic, but that's a very clear display of when the big safe asset is making you money. In this case, the S&P 500 index. When that's making you money, you're going to look to take on more risk in other more risky markets like Bitcoin. But on the flip side, if we're starting to see that those safer markets are looking scary, like back in COVID, March 2020, that COVID crash, when everything's kind of going to shit, nobody's interested in Bitcoin either because Bitcoin is seen as a risky asset. The kind of money that you guys want to pump Bitcoin is the same money that views Bitcoin as just another tech asset like Tesla or Apple.
Yeah, no, that's I think that's a good that's a good analysis. And for me, like I think it's great information, but for me as a trader, that information is a little bit more irrelevant. However, definitely, I agree. In short. And the same also goes for global currencies, right? Because Bitcoin is being measured against the dollar. It's a global currency basically, and the DXY, locally, I would say, is locally, going up, but overall, this is take these lines with a pinch of salt, I would say, but it's pretty much just going sideways, and that is one of the reasons why the ES and Bitcoin have been just kind of been doing their own thing. Because of that, the overall macro picture on the dollars at the moment is just going sideways. Yes, locally, definitely it is going up. We have some, short-term volatility seen with like some CPI data. We have the inflation data. We have the jobs reports coming out this week, and obviously we also have like some global political situation going on that do affect these kind of assets, absolutely. But overall, the narrative doesn't change when it goes. Or like the underlying sentiment at the moment, the dollar is like quiet. It's going sideways. Locally, yes, uptrend, and that results in a little bit of downwards pressure on risk assets such as crypto, Bitcoin, etc., etc. I guess a lot of people might also now specifically be interested in oil. Same story there. Oil this is a very old chart. I honestly can't be bothered to really clean that up, but it's really going sideways as well. There's we have seen some local volatility on oil, but yeah, it's overall just really going sideways. It's in a range bound environment between 95 and really 65 more or less, and as long as we don't lose or reclaim any of these levels, it's simply going sideways as well. Obviously, we do have volatility within that range that can affect like shorter term price fluctuations, which is much more really interesting really for day traders, rather than investors or people that only focus on like the high time frame perspective. So yeah, and lastly, I guess I have to cover this as well, which is gold. Gold has been breaking out massively recently. For those that have been following me for a while, this is a chart that I literally posted in 2021. I asked on my Twitter, like, hey, I lost the chart myself. I asked around on Twitter, like, hey, does anybody have this chart still, because I just lost it, and a kind person did provide me with that chart. So here's the here's the proof that this was not in 2021. This chart dates from July 28, 2022, right, where I had this sideways channel where I expected that breakout or that fake out really to the upside of this sideways channel that we were in at the time, and I would expect a drop to the bottom of this channel to around 1700, 1650 before we would see a major increase in price. And mind you, this is a screenshot taken from July 28, 2022, and look at the result. Pretty cool. And so gold is also breaking up massively, looking very strong. And
I think what's crazy about the gold rally that we're seeing is that we're up by, from the breakout point to right now, it's been 42 days and we're up by 17%. Like, that is ridiculously
for
fast
gold, yes.
for gold.
I mean, this is one of the biggest markets in the entire in the world. So
I mean, it almost like, and it lines up with the conflict going on. I mean, to me, it kind of looks like insider trading. It precedes everything. The dollar moves up first.
I mean, it is very just commonly known. Like people just make very quick decisions, and gold traditionally has been seen as money, right? Which is different than from currency, which is.
But you touched on this yourself. You showed that your chart, was drawn back in 2022. I think, gold has had the fundamental setup to break out since 2020.
Yeah,
for sure. I mean, that was when inflation, gold is money, right? So that's when the inflation really started to get crazy with the furlough schemes and Africa, all the other crazy stuff going on in the West. It was at that time that we had the setup, but gold only breaks out now. Is there a trigger? I don't know. That's a discussion that I think might be worth having.
Yeah, that's a good question. I suppose what I would have to say about that is, in order to really answer that, and I prefer to answer this in a technical way, not in like a speculative way, or
yes.
I like to talk about. I focus on facts, right? On market facts, and rather than speculating into what might or might not happen. And if we just simply have the observation. You are already talking about time, so let's tie into that for just a little second, right? You are looking at the time that it takes for something to bounce. What I like to do is the time that something takes to consolidate. So, for example, here we saw a very sideways consolidation. This was, I mean, we're talking here about years ago. We're talking here about 2015, 2016, all the way to 2020, right? When when the COVID crisis hit. So this is already proof, right? When there's something going on in the world, people run for gold, right? When COVID hit, that's where gold pretty much exploded. Actually, am I saying that correctly? No, my bad, my bad. I'm taking that back because COVID actually was later, was in 2021, right? I'm confused. Never mind.
COVID was 2020, the onset of
So, yeah,
2020.
so okay, so getting confused here. But the point I'm trying to make here is the time that a consolidation is actually taking here, right? So if we already see a sideways type of consolidation, generally what you expect is for a proper consolidation to form in order for this to not be, an immediate bull flag, right? But scaling it up one time frame. And I hope that I'm not losing you here. What you typically would expect is after a significant increase in price, you would like that consolidation to take at least twice as long as the initial rise. That would signal that we are in a more macro sideways consolidation, that being part of the bigger narrative rather than the immediate narrative, right? So let's say if this was the end of the consolidation, this was all still one move, and that bigger consolidation I would be expecting later on. Moving on to after having this really big rally on gold, we can see that we are seeing a longer lasting consolidation and a bigger and with a wider area as well. So for me, it all makes perfect sense. And literally also this channel, I mean, look how perfectly respected this also is. The midline, the bottoms. Yes, we had that fake out, back test, fake out, but eventually we got back into it, right? And referring back to this in Bitcoin as well, the possibility of us getting that $57,000. This is definitely also a scenario where we fake out, get a lot of people very afraid, scared, shaking them out of their positions, only for us to then just drop or reclaim that channel and then just make our rise upward. So that's
It's the best. It's the best thing that can happen. I just want to throw this Bitcoin chart on real quick to show how this is actually what we saw a little bit earlier on in 2024. Actually, was it with the ETF launch? When the ETF launch happened, just the dates surrounding that, we saw this nice little deviation out of this orange box. But then we had the exact same thing happen down below, but it's actually the most bullish thing that can possibly happen, because for me, I don't just view these as, market makers looking for liquidity or whatever, which is what a lot of people will say, but I think it's also just the bears literally, like you said. I actually love your approach, by the way, of sticking to facts. It's the most, it's the best way to stay grounded, and you're going to make a lot more money if you take that approach. What we're also getting here is the bulls literally having their chance. They have their window of opportunity to take the market down and take it as low. I'm sorry, the bears having their chance to take the market down as low as they want, whether that's 30K, 20, 15, you name it. They've got their chance to trend the market in the direction they want it to. But if they fail, and if they show that they're unsuccessful, that bull is now back in the court of the bulls. And that's why you see it's always right after these moves, or right after these kind of deviations up, where you go polarized in the opposite direction. And over here, I mean, this could have turned into another deviation where we're back in the range. But now that we've tested both sides, we've seen which side we want to stick to. That's how we're able to commit to one particular direction. And we saw the exact same thing happen when we entered this range. It was the exact same thing. The bears had a chance to take this significantly lower, turn this into a blow off top type situation. It did not work. And it was purely because it didn't work that we were able to rally up and start setting brand new all-time highs, 25% above the current price.
Yep. Yeah, no, I fully agree. Well said.
Cool.
Well said. Well said.
Thank you. Thank you. Do we have anything else we want to go over in this live stream?
Well, I think I want to take one question that I see here. How did you read in the chart that Bitcoin was going to crash back to $60,000? I think it's worth addressing that, because there's no way to read that. Well, I want to highlight that. So let me explain. Obviously, I've been showing here on this chart I've been showing like a macro sideways channel, and I like to do that on this kind of stream to keep it simple and understandable. But this is obviously not just my only technical analysis that I do, right? I'm a day trader and I scalp trade the lower time frames as well. So very simply put, what I like to do, if I remove this and I put on some horizontal levels that I take from like daily candle closes, weekly candle closes, monthly candle closes, etc., right? Then what we find here is a weekly level, right? It's a higher time frame level, very important level. What I wanted to see, and this is where the true technicals come in and where the true sign of weakness actually showed. If you fail to see this one, okay, that's totally understandable because that is what I gave out in my trading group at the time. We absolutely need to reclaim this level to see for this to be classed as a potential bottom. What do we do? At first, we get a rejection, we make a higher low, we go through the weekly level, we backtest it and we hold it. Looks really great, great, great. Backtest it again, looks great. But we fail to make a new high. All right, first point where I would be saying, okay, let's monitor this a little bit longer because this is not a reclaim. What happens next is we drop below it and backtest it as resistance. This, ladies and gentlemen, is the sign of weakness. This is how I've been able to read weakness in the chart and expecting a drop lower to at least take out this low. And that's what happened. So this was already in the chart. The fact that the news broke amplified the move and it happened faster and quicker because of it. But this was already a sign of weakness in the chart. Now, obviously, that would have changed once again if we actually did something like this, and that is what you need to do as a technical analyst. You don't take things for granted. You don't think in certainties, but you continuously assess. Like, okay, with the new data that we've got right now, how do the probabilities shift in and out of favor of your trading idea? And if you're able to do that well, if you're able to dissect the chart into little pieces and tie them back together in a narrative, that is ultimately how you can make very informed trading decisions and, most importantly, manage your risk accordingly.
Amazing. Good stuff, man. Like that view into what the day trading side of things would look like. Ladies and gents, thank you all for tuning into this Monday show. Like I've said at the very beginning, we're going to be doing this every single week. It's Mike and I. You can find our links to our channels linked down below. If you like our style, you're going to find much more of that on our respective channels. You're getting amazing shows around the week on the Financial Summit channel. So make sure you're subscribed to this channel and you've been throwing the likes up. Any final words for this stream, Mike?
I would say thank you for watching, first of all, obviously. And yeah, I would say like educate yourself is really important, because these kind of events, let's say if you're a longer term investor, if you're a hodler, or if you really believe in Bitcoin, these kind of events do make you reconsider your position and perhaps make you want to sell because of the news that is breaking out, and you think like maybe like it's gonna escalate or whatsoever. In the end, if you have the knowledge or if you have the ability to read price action, read the chart, then you will quickly come to the conclusion that none of that is necessary just yet. And we are still continuing the course that was already expected prior to that. Yes, we've seen a drop in price, but it's nothing to be scared of, at least at the moment. Maybe tomorrow is going to be different, but at the moment it simply is not. And that can help.
If you don't break the range, there's nothing to be scared of. You don't get scared at support. You don't get excited at resistance. You're doing it the opposite way around.
Exactly. So yeah, long story short, make sure you trade based off of facts, based off of what you know, rather than what you feel. I guess that's the point that I was trying to make.
Beautiful. Good stuff. Thank you very much, Mike. I'll see you all in the next show.
Cheers. Bye.
Cheers. Bye.